All right, guys, good morning. Good morning. Let's make sure my headphones are working this morning. Testing. All right, good morning, everybody. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time. It is August 17th, 2022. Let's go ahead and rock and roll. Dow futures are down 222 points, NASDAQ down 143. S&P 500 futures down 0.91%. Finally, right? You get a little bit of red. I mean, we've been just seeing up, 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 up. Russell 2000 down about 1%. Crude oil is flat, 86.50 an ounce, a barrel, excuse me, an ounce. That's gold. Gasoline futures up 0.12%. Gold futures are down 17.84 an ounce. Silver futures down 1%. 10-year 2.871. We were right on 2.9, just came back a little bit. Dollar index up about 0.27%, 106.78. VIX up 4.32% at 20.54, back above 20. Euro dollar still hasn't hit my alert, so again 101.56 is the level that we're currently at, down about 13 pips. 135.12, up 87 pips for the dollar. Yen Bitcoin futures are down 1.42%, 23,605. Ethereum at 1869. Copper futures are down 0.63%. And that is everything for this morning that I'm looking at. Let's go and take a look at S&P futures. We're going to go to the daily. I guess everyone is saying, finally, Carlos, a little bit of red. Well, the day has started. The day hasn't started yet, excuse me. 1, 2, 3, 4, 5 straight daily candles on S&P futures that we've had. So that's about a 5-day winning streak if you're going by futures. We tagged that 200-day. We talked about that yesterday. We rejected. Now we're like, now what? Well, now we're at the 100-day on the hourly. And again, I have an alert at 42.49. If that does break, then we can start talking about shorting. But as of right now, there's really not much to do since the move was overnight. I didn't have any futures overnight or anything, so not a big deal. Let's go ahead and move over to the Volatility Index. We talked about RSI on Instagram yesterday. I posted that, and on Twitter, that the RSI reading for VIX is at its lowest point since November of, I believe, 2019. Was that it? What was that exactly, that figure? I don't want to bring up RSI again here on TOS. It's kind of a pain. Yep, since October 2019. Here you go. I'll actually bring up the tweet. Here you go. And you could see here, again, we had that, that trend line that I drew, break down below it. But look at this. We're at the lowest level, guys, since October 2019 on the Volatility Index on a weekly chart. So a really big time frame. We'll go ahead and move over to S&P futures. Again, you could see we're at 75 or so on RSI. This was at 43.06 yesterday, last night. And again, kind of coming back down a little bit. So again, if we want to kind of bring up the RSI, I really don't use it much, but again, it's something to use if you like. But again, in terms of the Volatility Index, we did fill that downward gap here. There isn't any upside gaps that need to be filled, at least short term, on Volatility Index VIX and on the daily. So not much edge if you're looking for the VIX to give you some kind of direction. There just isn't much to go by. Let's go ahead and take a look at the dollar. 106.97 is my resistance here. Again, you can see 1, 2, 3, kind of a triple top in a short-term time frame. We're kind of pulling back a little bit. Let's go ahead and bring this up on the daily, and you could see kind of just moving sideways here between 107 to around 105. I'd still expect us to break down 105 as we go. Let's see if I can share this. The actual, excuse me. Go ahead and put this on the blog. There we go. I forgot to put the link on the blog. The Discord link for YouTube isn't exactly working. We're working on the bot. So if you are a Discord member and you're just joining us, my apologies. I didn't send the link out to you guys this morning on the blog. but there it is now if you are just joining us. All right, that was a Bloomberg alert. We're going to move on to TNX, 10-year yields. And again, I know inverse head and shoulders. There is this gap to fill here out of 2904. It did fill, so at least that's done. I do expect lower rates as we continue forward. That's still my call on that. Let's go and take a look at crude oil, and they're still coming in hot. Crude oil, one more time, again, we're 84.61 is our level. We're getting very, very close to it. Once we do, I'm sort of looking for some XLE puts or some energy puts. But again, nothing to do here for now. Let's go ahead and take a look now. Let's go over this retail sales number together. How's that? All right, let's bring up Twitter. Retail sales. Where are we? Advanced retail sales month over month. 0.0% month over month versus 0.1% estimate. The retail sales excluding auto was 0.4% versus 0.1%. So that's a beat on core, and that's a miss on headline. Now, here's the real number that I saw that stood out. This is the year over year actual, year over year. 10.02% versus the forecast of 8.42%. So people are spending, people are out shopping, and that's what happens when people are working. I mean, that's the only way you can make money. Either you're an investor or you're working, you're part of the labor force. And we see unemployment at historically low levels. It's kind of hard to have a recession or have a protruded, a really deep recession when everyone's working and has money. So again, I know we have the 2 consecutive quarters of negative GDP based on advance. I think that was kind of the tell in the market that buy the recession, right? And sell the hope in a sense. So looking at this as a trader every day, it's really day to day. And that's really what we have to go by. Again, we are down about 0.81% on futures, but this could be bought, guys. You're right at the 100-day on the 1 hour. We've had pivots before, we've had bounces before. So, again, nothing really new to us. So, here we go. With that being said, sorry, it was just a text. Retail sales were okay, not terrible. We do have Fed meeting minutes today around 2 p.m. Let's see what the Fed talked about in the last meeting, which I think we kind of know that they still want to raise. But for the end of the day, we also had some numbers on Target. I do own some Target, obviously. Target's earnings did miss. Let me go ahead and get that number to you guys, and then we'll answer some questions. Well, Lowe's missed on revenue, 27.5 billion. I'll go ahead and show you. Let's go ahead and extend this here. And you could see here on Lowe's 27.5 billion, 28.13 billion. Adjusted EPS did beat. Sees total share repurchases of about 12 billion. See fiscal year sales, total sales 97 billion to 99 beats expectations. So Lowe's is up pre-market. In terms of Target, 39 cents versus 71 cents. That's a miss. A miss on revenue. Notes planning cautiously for the range of the year. Excuse me. And current trends and support of prior guidance. Same-store sales 2.6%, digital same-store sales 9% year over year, comparable traffic up 2.7%, and they reaffirmed outlook. But Target has been absolutely on fire when we bought it. If you guys remember, we had that big fall on the daily right here, and we expected that gap. And that yellow line was our buy zone, which was right here. That was the initial breakout that we had right in July of 2020. We played that support, we bought it, and now we're right above the 20 on the weekly chart. If we go to the daily chart, again, you could see pretty much just rejecting that 100-day moving average. Now we're around 175, filling that gap. We should fill this gap here around 173.44. I'd be a holder of Target until we fill that gap to 209. You could take some profits, or you could just, kind of move your stop if you like, or you could just take out your initial investment and let the profits ride. That's always a good thing. So again, that's still my target, right around 209.30. Again, it won't happen overnight, but again, I like this as a swing. I used to own Lowe's, but again, I have Home Depot instead. I didn't want too much exposure as rates were rising. This was sold last year. On the daily, we're right at the 200-day. It rejected 215.80. We need to get above 215.87 or so, or 216 to kind of get above that 200-day. Not a ton of edge in terms of gaps. The nearest gap to fill is right around 250. I don't think it's worth trading here on lows. Again, they usually don't have tons of volume. In terms of target earnings, terms of target trading it, at least short term, I mean, the chart looks great. The 50-day moving average seems to be that support, but I don't think there's much to go by here, to be completely honest. So let's go ahead and answer a couple of questions. Robinhood just announced it's adding new advanced charts. Pretty cool. And I'm just answering a question to one of my staff. All right, let's answer some questions. William says, Morning, boss. Thoughts on retail sales numbers? I think the retail sales numbers were okay. Not bad. The market was red before it for the most part. I think this is all technical. Again, the RSI was just too damn hot on short term on S&P. So again, you're going to get, we were waiting for a pullback of some kind. The question is this a decent enough pullback to short? That remains to be seen. But retail sales were okay. I mean, Walmart posted decent numbers. Apple posted great numbers. Target, okay numbers. I mean, retail sales are okay. AMD and the VIX. Let's go and take a look. I had to close AMD yesterday. Took that L. Just was slow moving, and you could see now it's breaking down. So at least a good sell there. But I wanted to hold that yellow line, and we were running out of premium. So AMD has at least a little bit of room down to 94.20 if it does hold below this 200-day moving average on the hourly. If we take a look at the volatility index again, we talked about that RSI being oversold. And again, you still have this trend line up on the daily. In order for us to even think about really seeing some really good short opportunity, you need to get above 2175, the 20-day. Are numbers from sales actually bullish or bearish? Well, it depends. If you look year over year, it's bullish. If you look month over month, it's okay. And in terms of month over month core, it's bullish. It's kind of difficult here because the Fed wants to stop demand, but yet demand is still strong because people are working. They need the labor force to be softened in order to bring down inflation. Since they can't drill more oil, they can't fix supply chains, the Fed can only destroy demand. Good luck. America loves to shop. America loves to travel. If you want to see something really funny, go ahead and Google Las Vegas airport packed or Las Vegas airport full. And you could see lines for days. The airports are jam packed. And again, if that's a recession, I mean, this is the stupidest recession I've ever seen because someone's lying. I mean, I was just in Tampa this weekend and I walked into the Hard Rock Casino with Anthony, our CIO, for a meeting, hanging out, having a drink, and that place was packed. So again, I always say, look at two places as when you're looking at the economy: the malls and the airport. If people are shopping and people are flying, the economy is fine. Now, again, I understand the academic side. Well, the recession, I agree. 2 consecutive quarters of GDP being negative is a recession. I'm not changing that definition. I don't care what the White House says. That's what it is. But it's a little different this time. I mean, look at the employment numbers, they're low. So, again, you kind of have to look beyond your economic studies. You have to look beyond the textbook. And that's where the meat of it is. You're going to have to take a look at what's really happening. All these indicators and all these reports, guys, work on a lag. So it's really day to day. How else can you verify these economic numbers? Well, Atlanta GDP is a one good number. You have weekly unemployment numbers, tons of stuff to look at. But again, it really is based on price action at the end of the day. The market does not lie. BBBY. Oh, yeah. So check this out. On our Twitter, on our, what is it? The Discord page, we have an unusual options activity chat or channel. And we have a bot from Tradelytics. They offered licensed. And you could see that yesterday. Again, I don't trade all of these, by the way. There's just so many. BBBY stock breakout was posted yesterday at 12:42. I did not trade it. Maybe some of them did. Maybe some of our members did. Take a look at this on the hourly at 26.55 now. It's up $6 since yesterday's close. So if you guys caught it based on that, that's for premium and masterclass, not basic. If you guys caught it, congratulations. But maybe if we get a little more meme names to the upside, we've done it before. Let's see. It's just difficult to kind of scalp them. It's a lot of risk. I don't want to touch it here, especially on this rise. What I want to short it here, kind of tempting fate. So just too much volatility. They were halted yesterday with GME. Again, if you want to take a Pepto-Bismol for all this roller coaster ride, be my guest. But I'd rather just play it calm. Its last couple weeks have been very solid. I really don't want to give anything back. Let's go ahead and take thoughts on Coinbase. Huh. I do own Coinbase at 300 and something bucks. Someone kill me, right? But that's okay. I do use Coinbase actually. Let's take a look at it here on the daily, rejecting that 100-day moving average so far. There is a small gap to fill around 81. So again, if you are trying to trade Coinbase and you do like, well, I guess the options, mind you, take a look at the 80 strike on Coinbase. Again, based on the daily, maybe buy some time, a week or two, and you should be able to fill this gap unless it did fill. Nope, it filled. So negate all that. This gap was already filled at 82.03. Not much edge here on Coin then. I thought we would have that, maybe that possible gap to be filled, but no dice. Forget Coin. Nothing really to do there unless the meme stocks explode, and then God be with you all because I have no idea what's going to happen. Thoughts on UK 10.1 CPI print says it might hit 15. Well, you got to understand that the UK is really exposed to what's going on in Europe and the energy crisis over there with the Russian and Ukraine invasion. The United States, this is what everyone has been asking me. Well, how come the United States is doing better or the United States inflation is going down? Well, we're not that exposed to Russia in terms of energy. We make our energy here. So, with that being said, you have to look at the United States and the United States dollar as being the best house in a bad neighborhood. Globally, the global in the global markets, global economies, they're slowing down. Some are recession. Ours is a recession technically, but the United States is holding up better. Why? Well, we're not that exposed to Russia, Ukraine, those issues. So again, we have at least that edge. It doesn't mean our economy is perfect. It just means it's better than everyone else's, and that's a fact. And that's why you start to see people that are in Europe and Asia, they're piling into equities in the United States. It's safer. It's safer, it's better, it's more return. Fact of life. Hey Carlos, are we finally going to have a red day today? Wow, that is the $1 million question. I kind of go by this. The Fed meeting minutes are not going to give us anything different than we already know. I honestly think this dip will be bought, and hear me out. Every time we've had this kind of dip or so, right at the 100, since pretty much last Wednesday or 2 weeks ago, it has bounced around that level. So again, maybe 42.50 kind of gives us some support. But again, think about it. So many people waiting for something. So many people are ready to short. The market's going to be middle finger to them. I'm not going to throw the middle finger here on YouTube saying, hey, screw you. We're going to go higher. Manias work both ways, guys. Everyone thought they were Michael Burry at 3,600. I'm going to short this to zero. The world's ending. The world didn't end. And we started getting a short squeeze higher or a bear market rally or the bottom, whatever camp you're in. It's not that simple. Again, you could bet on the end of the world, sure. But guess what? The world keeps spinning. Now, again, if you think we're going to have nukes flying, then money isn't even important anyways. By all means, just buy a shelter and buy canned food. But again, if you are a trader here, you have to look at it both ways. How many people are expecting us to fall versus how many people are expecting us to rise? We have seen the positioning, the lowest S&P positioning to the short, the most positioning to the short side on the S&P since 2016. What happened then? We soared. We have it here. Same price. What happens? More likely going to soar. I think we do bounce. We'll probably end up flat for the day just to screw the bears because the market doesn't care about bears anymore. I think now we're just getting squeezes on squeezes on squeezes. Bed Bath and Beyond being an example, GME being an example. Look at football TV yesterday, up 60% in a day. But the Bulls, I guess, are back. Thoughts on SPY? Oh, and you're welcome. Again, SPY, just like S&P futures, just tagging the 100-day. Now, if we break below 425.40 or we break below 418.23, possibly, but a break of 425.40, we can start taking a look at the 420 puts. Possibly, we'll see the volume as we go along. Let's see here. I get your logic, but what do the technicals say? The technicals on S&P, let's go and take a look. Yes. If you're looking at just the daily, we're just rejecting the 200-day. We tagged it, we rejected it. Could we get back to 42.25? Sure. The 100-day on the hourly, that's your big level. If that does break, 42.50 is coming, pretty sure. but that's where we are currently, and it looks like it's holding. Already got retail sales news. We got Target, we got Lowe's, and we're still kind of holding here. Yields are coming back down slightly. The dollar's coming back down slightly. The VIX is still holding around 20. Looks like a dip might be bought here, guys. I know it's kind of maddening, but I think a dip could be bought here. Is there more money on the longs or shorts? Way more money on the shorts. Take a look at the CFTC. We talked about that. Yes, I think last week I posted it. Again, a lot of people are still short, guys. A lot of people are expecting us to retest the lows. More likely, it's not going to happen, guys. Last minute push on Tesla stock split qualifiers. Again, guys, we had a stock split on Amazon. The stock fell. We had a stock split on Google. The stock fell. The stock split is nice short term, but again, it's not a huge deal. In terms of Tesla, I don't think there's much edge here unless you start breaking above 950. But until then, I wouldn't really touch it, at least to the long side. On the short side, you do have a slight gap to fill around 902. So we're kind of holding around there. You can see some consolidation there for the most part. So again, I wouldn't get too excited on Tesla. It's just expensive too. Now I know we're going to get a split anyways, but maybe we could talk about trading it when it's actually split. All right, so a lot of questions answered. MSTR, let's go and take a look at that. I had one more. MSTR breaking below the 100, unlike SPY. And on the daily, again, still a downward trend. Not much edge here. I guess a retest of that 300 level, the 20-day moving average, is now crossing above the 100. But again, I don't see, unless you're expecting another meme squeeze, I don't expect MicroStrategy to do much, guys. But also keep an eye on Bitcoin. Tons of stuff we went over today. Hope everyone's having a good morning. Enjoy your morning. Enjoy the rest of your day. We'll catch you guys later for the aftermarket recap, 5 p.m. Eastern Standard Time. Have a great rest of your Wednesday. We'll see you on Twitter and on Instagram. Cheers, guys.